Thanks for watching. In today's video, we're going to give you the latest London property market update, and we're going to get started right now. Hi everyone, thanks so much for watching. I'm Arinzeh with Onyx Property Team and Keller Williams. Thanks so much for watching my YouTube channel. In today's video, I'm going to be talking about the latest London property market update. If you're an international or even domestic buyer, seller, renter, or thinking about relocating to London, I would love it if you would subscribe to my YouTube channel and make sure you stay alerted of all the latest videos that I put out, because I put out weekly videos about the London property market and living in this incredible city and showing it off and all the things that you can take advantage of. But obviously, if you're an investor or you own property, you probably want to know what's the latest and what's happening in the market. So today's video is dedicated to giving you the highlights of over the last 6 months, kind of the first half of the year, what's happening and what we might look forward to for the second half of the year. So just to give you some historical perspective, between 2010 and 2013, London had one of the fastest growing prime property markets in the world. By the third quarter of 2013, its luxury homes were the most expensive globally at £3,995 per square foot, compared with £3,917 in Hong Kong and $3,101 in Manhattan. But since those peaks of 2013-2014, the capital's housing market has been in quite the slump. We've had Brexit and the pandemic travel restrictions, which have muted price appreciation. This while other regions of the country have had runaway house price growth over the last 13 months as the flight for space, both indoor and outdoor, have become more critical. Building Society nationwide put the annual growth of the average UK house in June at 13.4%, the fastest growth since November 2004. But London has lagged, particularly in the market for the most expensive homes. Prices for £1 million homes in central London have fallen by about 17% since 2014, according to Arinzeh, which monitors the London market. As you can see from this graph, the 13.4% annual increase includes a 0.7% increase in June from May to 245,432, marking the highest annual growth rate since November 2004. In terms of quarterly growth through June, Northern Ireland and Wales recorded the strongest gains in the second quarter of 14% and 13.4% house growth respectively. Scotland posted the weakest house price growth of 7.1%, closely followed by London at 7.3%. So we have seen growth overall in the quarter, most recent quarter, but relative to everyone else, it's definitely been a poor showing. Prices rose in London at an annual rate of 7.3% in the second quarter of the year, up from 4.8% in the first quarter. The average value rose £27,000 over the 3-month period from £482,576 to £509,935. This is actually the first time since Nationwide began compiling regional figures in 1973 that the average cost of a home in London has exceeded £500,000. This is an almost 40-fold increase since being recorded at $12,848 in the fourth quarter of that year, being 1973. So you can definitely see London has trended for significant growth over the last 40-50 years. However, over the last 5 years, it's definitely been rockier and a lot bumpier. In June 2016, the average price of a home in the capital stood at an all-time high of $468,122, according to the Land Registry, having added more than 100,000 over little more than 2 years. 5 years later, however, after essentially flatlined for half a decade, the average house price is $491,000, an increase of just 5% or 1% per year. Now, I've thrown out some slightly different averages, but again, it's depending on who is actually recording the figures. Nationwide might be a little bit more robust right now because Land Registry relies on people actually having recorded those actual completions, and that can sometimes have a bit of a lag. Coming back to that 1% annual growth, what makes it even worse is that compared to inflation, which has averaged about 2% per year over the same period, it means that the roof of your head has actually lost value in real terms. Now let's check affordability. From an affordability perspective, London house prices now cost 11.7 times the average salary. But while London still has the highest house price to income ratio in the country, that has grown the least of all UK regions since the stamp duty holiday was introduced last year. With average British salaries now at $31,000 and $257,726 for the average national house price, the house price to income ratio is 8, but before stamp duty holiday it was 7.5. So again, while the government has tried to encourage ownership and spurring the property market, what it's also done is inflated prices such that the salary metrics has widened for many people, especially those outside of London. So what is to come? Well, no one really knows, but here are a few key stats that might give us some insight. Evening Standard forecasts that the capital's population will drop by 300,000 this year. That's pretty significant since I think historically we've definitely been seeing growth in the capital as people wanted to come in to live, take advantage of the culture, and be close to jobs. But what this suggests is that people through COVID are definitely comfortable living outside of London, getting more space, and recognizing that they might not have to physically come into the office as much as they used to in the past. However, on the good note, in July, according to the Evening Standard, asking prices in Westminster Borough rose 5% to $1,437,811. This is the highest jump of any district of London, followed by Kensington and Chelsea, up 2.4% to $1,689,368. So we're finally starting to see some price appreciation in those prime central London boroughs that we haven't seen in the past. So I think that London prices will continue to go up this year as international travel opens up. Now again, this is heavily dependent on what happens with COVID. So I think everybody, not just if you're a buyer or seller, but all of us need to be quite flexible in recognizing that we might have to adapt depending on what the COVID situation presents. That might also mean that for domestic buyers who pretty much had prime central London to themselves, that if those international buyers start coming back, they're going to be seeing more competition now, and that might mean more price growth, which we're anticipating. But that also might mean that more sellers who might have the option to sell and really don't have to, might start putting more properties on the market, because we've definitely seen very low transaction volume over the last 12 to 18, 24 months as well. So really, in summary, I really think that what this means is that the situation is still quite precarious, but when I'm working with buyers or sellers, I really want to understand what is driving their move. For buyers, this could still be an optimal time to take advantage of the fact that we've seen these price reductions that are still well below the peaks. For sellers, it might mean really understanding what your reason to sell. We all always have reasons to sell, whether it's for personal reasons or perhaps you've owned a property for a very long time and you're really ready to exit out and do something else, or perhaps live someplace else. So if we can understand that, we can definitely create a strategy that's right for you. It's not about trying to time the market or beat the market or anything else, but it's really trying to give you the best solution given what's happening in the current market. So if you're thinking about buying, selling, renting, or managing, or even relocating to London, make sure you get in touch. We'll have my details available, and I look forward to seeing you soon. Bye for now. Thanks so much for watching. Make sure to check out the other videos on my YouTube channel where I share great things about the London property market and living in this incredible city. So that's Arinzeh with Onyx Property Team and Keller Williams. Bye for now.